Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, August 19th. I am, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining us, Bruce.
Yeah, glad to be here.
Nice to see you. We are now in the third week of August. It's hard to believe that the summer has gone this quickly.
I know. It's kind of depressing, isn't it?
It is.
Well, maybe not. Maybe, some people are looking forward to their kids going back to school, but.
Well, it's not a terrible thing. Yeah. Okay, listen, we're going to jump right into it. We're going to talk today about a bit of a market pullback that we saw this week. You're going to tell us what's going on there. We're going to talk about a rotation in asset classes. We're going to talk about the SPX advanced decline ratio. Don't worry, I'll explain what that is. And then Bruce will tell us what's going on with that. We're going to talk about something that's going on in Jackson Hole, Wyoming next week, which is Mr. Powell will be there saying stuff that we want to know about. And then, of course, we're going to get into some CSE Issuer news. So what do we see in the market this week? It pulled back a little bit. What happened?
It did, yeah. I mean, off the June low, we've seen the market go, close to straight up, really, right? It's had a great recovery. The month of July was very strong. Most markets indices had positive returns, and if you look at markets and how overextended they get to the short term to the upside, well, we think that the market just was a little bit extended to the upside, and so this week there's been a little bit more mixed news, and it's caused the market to pull back. So this is the first week in 4 weeks since we've had the indices have a negative performance unless something miraculously happens in the last hour here of trading.
So did you expect this? Because you were watching it go up for a few weeks and you wondered if it was an actually going out of recession or kind of what was happening there. Did you expect this?
Yeah, I mean, what we were looking at is whether or not this was a bear market bounce or a new bull market. And we're still leaning towards the fact that this is a new uptrend that's about to start and carry on. Anytime you look at a market, it'll be overbought or oversold. Not always, but it can get to those conditions, and it is healthy for it to pull back. That being said, we would, just being on the long side of the market right now, we would like to see it, continue, but it's also healthy to have it pull back. So it's not overly surprising that it's happened.
It'll be interesting to see what the fall brings. Let's talk about a rotation in asset classes. What changed?
Yeah, so it wasn't something that just changed immediately this week, but we've been continually seeing this. And if you look at the chart that we'll pull up here with the asset classes, this is one of those relative rotation graphs that we've talked about numerous times before. And what happens here is that different asset classes can move around this chart in a clockwise fashion. So they go from the improving into the leading, weakening, and then lagging. And in this case, it's looking at the Vanguard Total Stock Index against a number of different other asset classes. So the one on the very top is the commodity index. You're looking at the dollar, which is the UUP, the index itself, which is the VTI. You're looking at the index XUS, the world index XUS. And you can see that in pretty much all the cases, they're improving, and they're improving relative to the stock market, the world stock market. So it's not just a single market. It's not just the S&P or the TSX. It's the world stock market. And you can see that continues to improve against, kind of all asset classes at this point in time. So again, when we talked last week about whether or not this is the start of, a new bull market or if it's just a bear market bounce, this is just more evidence that we're looking at to say, how's it comparing to other asset classes and what kind of follow through will we continue to see?
Interesting. Okay, we're going to talk about the SPX advanced decline ratio. So the advanced decline ratio is a basic market breadth indicator. It compares the number of advancing stocks by the number of declining stocks. And it's essentially there to identify the breadth of a move in the market. Did I get that right?
That's right. Yeah,
All
100%.
right. So you mentioned it was at an all-time high. So what happened?
Yeah, that's right. So, we've talked lots on the show about breadth thrusts, and that's really, when you see the market oversold, and then you see it strong buying come in, and you see strong buying come in for, multiple days. And what we've seen, if you pull up this chart of the advanced decline ratio, this is the cumulative advanced decline ratio. You can see that it's broke through a resistance level and it's making new highs. So anytime you see more advances than decliners, that's positive for the breadth of the market, and it means that it's trending higher. And it's just one more piece of evidence that we look at to say, is this a bear market bounce, or is this the start of a new uptrend? If this can stay up and continues to build, then it gives us more encouragement that this is the start of a new bull market and not just a bear market bounce. But of course, we need to see continual follow through, and we need to see evidence on a number of different areas.
It seems like everything's kind of trending in a positive note for the markets these days, isn't it?
Well, it certainly has been off that June low, right? I mean, sentiment just got pushed so extreme. There wasn't anyone who wasn't fearful of the market's inflation or recession. And of course, that's what the market likes to do, is when everyone gets loaded up on one side, it moves the other way. And so that's exactly what you've seen. And now there's some digestion going on this week, and it's just really trying to figure out, is this, the start of something new, or did we just simply move up, got that oversold, worked off, and now we're gonna meander or head down again?
I think this fall will be really interesting. I know for myself personally, we've been working from behind our screens for the past 2 years. And my fall is already going to be quite busy with traveling. We're back out there traveling again. And so I'm just curious to see how the markets are going to do now that I feel like even though we've been at work and been working very hard the past few years, we're kind of like, we're getting back out there. So hopefully issuers have the ability to get out there and raise more capital and keep moving forward.
Yeah, I mean, we're starting to see a few financings coming our way, which, you go back a couple of months ago and it was absolutely dead. There was nothing. So, there certainly is a little bit of pickup. That's also to do with risk appetite. Historically, it's not a great time to try to raise money when the market's dropping every day and, investors are fearful. You kind of want them to be, not in that mindset in order to raise money. So it's good to see. And yeah, it will be interesting what the fall brings.
Yeah, absolutely. Okay, so next week, Mr. Powell will be in Jackson Hole. This is for the annual Global Central Banking Conference. Last year, I think the world waited with bated breath for what he had to say, and I think it's kind of the same this year, isn't it? Basically, we need to know what his thoughts on how high U.S. borrowing costs could possibly go. Is that right?
That's exactly right. I mean, this year has really been a year where, and not to say that not every year is like this, but the market really has been focused on kind of every word that Mr. Powell says, and the nuances of the changes from, the last time he spoke to this time he spoke. And this is going to be no different. Most people have it marked on their calendar. He's speaking. When he's speaking, they're all going to be listening, and, the market will probably almost stop while he's speaking. And then as he speaks, the algorithms are going to be digesting what he said, and traders are going to be digesting what he said, and then that's going to push the market in a direction based on the interpretations of what he's saying. And does that mean that the Fed's going to continue to be super hawkish and tighten rates, or moving rates up, or are they going to go on hold? And what's sort of the timing on that? So everyone's going to be watching that for next week for sure.
My bet is it keeps going up a little bit. I think they have a decent amount of inflation to fix there. So that's my bet. It's on the 26th, right?
That's well, that's the day he speaks. Yeah, it goes through the entire weekend not this weekend, but the following weekend. But he speaks on the 26th. And yeah, the market is still projecting that there's going to be 50 basis points in the September meeting. And that's part of what drove this latest rally, is that initially it was a 75 basis point increase that was priced into the market. And then when the June inflationary numbers started to come down, then everyone started to say, oh, okay, well, maybe we're, on our path here, and that they won't have to go 75, they can go 50. and at that point in time pause. So what we should get an idea of, he's not going to tell us if it's going to be 50 or 75, but we should get an idea of how far he thinks out they go before they start to actually pause.
Yeah. Good. Okay. Well, we'll pay attention to that, and I'm sure we'll talk about it next week. Okay. We're going to talk about some CSE Issuer news. And on the point that you brought up earlier, just seeing some financing coming to light, I'm actually going to talk about two issuers today. They are both in the cannabis space, and they both done both have done some decent raising, or are in the process of. And I wanted to talk to you about it because obviously we had about almost a year the cannabis space kind of was a little stagnant. Would you say it lasted that long?
Yeah, it's been even longer than that. It started February 2021.
I think, yeah. You know what? I think it actually kind of started before the pandemic. It then did fairly well in the beginning of the pandemic. I think because it was, it was the pandemic. And
people
then
were sitting at home and not working, and they were bored, so they needed something to do. Yeah.
What was it in the States? It was called a necessary item. There was certain things that they considered necessary, and so those stores could stay open, and it was considered that. And I think that gave it a bump in the beginning of the pandemic. Anyway, so we have two issuers who have just done some nice raises. XS Financial, it closed $24 million in a line of credit with Needham Bank, a specialty company that provides capex and equipment financing solutions to cannabis companies in the US. Now, I thought this was interesting because obviously the US, they have issues with access to banking if you're in the cannabis space, mainly if you touch the plant. But I just thought that this was a really interesting concept that these guys they're actually able to bring down that line of credit and then provide that to the cannabis space. So good on them. They've done that. And then Cannabis, a leading medical and adult use recreational cannabis company, has operations in Israel, Canada, and Germany, announced a $5 million private placement. These are decent raises for kind of where the markets are at for the time of year, and especially for the cannabis space. Now listen, StoneCastle Investment Management, you've had a cannabis fund you were one of the first, I think, that really put one together. So what are you guys thinking about the cannabis space right now? Is this kind of indicative of what we're going to start seeing?
Well, certainly we're getting some green shoots in that area for sure. And yeah, after pretty much an 18-month downdraft in the sector, it looks like things could be starting to bottom here. The Canadian cannabis numbers have in some cases steadied out the U.S. numbers. Most of them have reported, and they were pretty decent. They saw revenue growth. In some cases, they saw a little bit of EBITDA compression. But there's still lots of room for expansion in the U.S., and it looks like potentially some of the oversupply is being worked out of the system in Canada. So, yeah, we think that with as far blown as sentiments got to the sector, that if we are in a new uptrend in the overall market, that you could also start to see some of the cannabis stocks start to return better returns for their shareholders here.
Awesome. I love it. Is there anything we should think about other than Jackson Hole going into next week, Bruce?
Well, I mean, the interesting thing will be how the market moves into Jackson Hole, how it's moving, digesting, kind of all the news. Most of the earnings are done now, and that's behind us. They were relatively good. So now it's just going to be trying to figure out where the Fed's going and this asset class rotation, whether or not it continues. And it'll be probably a fairly pivotal week on a couple of fronts. One is, did we just see a digestion this week, or is there a follow through next week? And then what impact the central banks are going to have on the markets based on what the anticipation is for Jackson Hole, what the other members of the FOMC say, and then how that relates to the market.
Okay, so I just want to ask you this, and I'm not sure how much it impacts it, but this is kind of a big deal because what Powell decides, the rest of the world kind of reacts, right? This isn't just what he's deciding in the US. It impacts kind of us globally, doesn't it?
Well, the US is really the center of global financial markets. I mean, London still likes to claim that that's the case, and anyone from Toronto will say that for sure. But they tend to be the biggest financial market in the world, and so yeah, everyone's queuing off of what the FOMC does from a financial markets perspective, but also from a U.S. economy perspective, because it's the biggest economy in the world as well.
Yeah, absolutely crazy. Listen, Bruce, lovely chatting with you today, and we will talk about Jackson Hole next week. So if you guys want to check it out, again, that's on the 26th. But you and I will be connecting next Friday. So thank you again, and have a wonderful weekend.
Yeah, same to you. Have a great weekend.
Thanks, Bruce.